This is part 3 of the Chapter 3 lecture series on posting and the trial balance. Let's get started. Thus far in this chapter, we have identified events that need to be journalized, and we have journalized them in the general journal. These are the first 2 steps of the accounting cycle. The question is, now what? Remember, the point in doing all of this is to prepare financial statements to help users make decisions. Well, if we simply journalized our transactions in the general journal and did nothing else, do you think those transactions will magically make their way to the financial statements? Of course not. We must post these transactions to what's called the general ledger. The general ledger is a grouping of all of the accounts that are maintained by a company. It keeps up with all of the transactions that impact each account and the balance in each account. By posting transactions to the general ledger, the numbers from the transactions are reflected in the balance of the applicable accounts. Posting to the ledger is the 3rd step of the accounting cycle. The ledger can be in a variety of formats. One common format, and the one that we will use in this class, is the T account. It is called a T account because it looks like an uppercase T. You have the account title at the top, and you list any debit to the account on the left-hand side and any credit to the account on the right-hand side. So remember, debits are on the left and credits are on the right. At the end of the period, you would calculate the balance in the account by adding up all of your debits, which in this case were $15,000, adding up all of your credits, which in this case were $2,000, and subtracting the 2 numbers. This will provide you the numeric amount of the balance, which in this case was $13,000. If the debits are larger, then it would be a debit balance. If the credits are larger, then it would be a credit balance. In this example, the debits are larger, so the balance is a debit balance. You would therefore list the balance on the left-hand side. If the balance were a credit balance, then you would list it on the right-hand side. Now let's practice posting the 3 entries that we just journalized for Sierra Corporation. We have talked about everything on this slide up to posting. All we have to do now is simply post the numbers from the journal entry to the appropriate T accounts. We have a T account for cash and a T account for common stock. We enter $10,000 on the left-hand side of the cash T account because it is being debited, and we enter $10,000 on the right-hand side of the common stock T account because it is being credited. And that is posting. Simple as that. In the second entry, we debited cash and credited notes payable. We therefore enter $5,000 on the left-hand side of the cash T account because it is being debited, and we enter $5,000 on the right-hand side of the notes payable T account because it is being credited. In the third entry, we debited equipment and credited cash. We therefore enter $5,000 on the right-hand side of the cash T account because it is being credited, and we enter $5,000 on the left-hand side of the equipment T account because it is being debited. What is the balance in cash after these 3 events are posted? It's a $10,000 debit balance. The total debits are $15,000. The total credits are $5,000. You subtract those numbers to get $10,000. It is a debit balance because the debits are larger. I would suggest that you now look through the remaining transactions for Sierra Corporation and practice journalizing and posting them. Once all of the transactions are journalized and posted, the ledger looks like this. Every transaction is listed in the appropriate T account on the appropriate side. The balances are also calculated and they are indicated in red. Now that all of the transactions are journalized and posted for the month, it is now time to move on to the next step of the accounting cycle, which is preparing the trial balance. The trial balance includes a listing of all accounts and their balances at a given point in time. You should always prepare the trial balance at the end of the period. The trial balance for Sierra Corporation looks like this. You always start with the title section, which includes the company name, trial balance, and the day that it is prepared for, which in this case is October 31st, 2014. The account titles are then listed. The ordering of these account titles is very important. You start with the balance sheet items as they would be listed on the balance sheet. Then you list dividends, followed by income statement items as they would be listed on the income statement. You have a debit column and a credit column. If the balance is a debit balance, then listed in the debit column. If the balance is a credit balance, then listed in the credit column. These balances are pulled from the ledger. The total debits should equal the total credits. If they don't, then something is wrong. If they do, then we have some assurance that we journalized and posted correctly. However, even if our debits equal our credits, we do not have absolute assurance that everything is correct. There are several errors that do not cause the trial balance to be out of balance. The trial balance will balance even when we forget to journalize a transaction, we journalize a transaction but forget to post it, we post a correct journal entry twice, we journalize or post the incorrect amounts, or we make multiple errors that offset one another. The moral to this story is that a balanced trial balance is a great thing and does provide some assurance of accuracy, but not absolute assurance. We will complete the accounting cycle in Chapter 4. This completes Part 3 of the Chapter 3 lecture series on posting in the trial balance. I hope you learned a lot. Have a great day.